Welcome back to the Gold Newsletter channel. Welcome back. Thank you so much for joining us here in Vancouver in our studio. My name is Kai Hoffmann. I'm the JR Mining Guy on Twitter, the CEO of the Sort Financial Group. And we have a fantastic company introduction and update lined up for you. It's with Bunker Hill. It's with Richard Williams. He's the president over at Bunker Hill. And really looking forward to this update because you're working on a zinc, silver, lead mine in Idaho, restarting it. Big project. Let's get an update on that. But before we start and with the nitty-gritty details, because you're really rapid exploration, a lot of different things, let's start with an introduction. Like, who's Bunker?
No, thank you, Kai. It's a great pleasure to be on here again with you. Bunker Hill is a zinc, silver, lead mine that ran for 100 years, but was shut in 1981 because they couldn't keep up with the environmental regulations that the US had put onto the industry in the late 60s and through the 70s. It happened a lot throughout the United States. It became a Superfund site. In other words, it had government money and some corporate money tidying the whole place up. And it remained fallow for 40 years. A team with me, mainly ex-Barrick, but not exclusively ex-Barrick, took hold of the option to purchase this mine a few years ago. Renegotiated that, executed that, built a partnership with the Environmental Protection Agency in terms of being able to restart this mine. It had an intact mining permit. It still has an intact mining permit. And with a number of equity and non-equity partners, primarily, if I shout out two, one is Teck, who is our 10% shareholder, and then Sprop's streaming and royalty business run by Caroline Donnelly and Mike Harrison. We raised sufficient money over the last 2 years to fund the restart of the mine. We will restart this mine at the end of this year, so in Q4 of this year, and we're on track and on budget to do that. So unusually in the junior space, we're a fully funded restart operation with a lot of work to do, based in the Silver Valley, Idaho, and with 14 million tons of resource. About 50% of that is being measured and indicated, and just over 3 million tons is in reserve. So that's our starting position with a lot more to come.
Yeah, fantastic introduction. You took most of my questions away, actually, because your answer there was fantastic.
Can expand if you like.
The second question I always like to ask with these company introductions is a bit of an overview of the cap structure, so just we're aware of potential overhangs and things like that. Maybe run us a bit through the debt as well, because you mentioned your deal with Sprott there as well.
Okay, well, we've got approximately 290 million shares outstanding. As I said, the company that we took over had been in existence for some time, and we didn't reorganize the equity part of the capital structure, and along the way, I've had to raise money, bring in partners to do that. So we're around about there with approximately, and you have to look on the website, around about another $100 million of warrants outstanding and so on. But we've finance this restart primarily in a non-dilutive, non-equity way, primarily. And the package to do that, which Caroline and Mike from Sprott Streaming and Royalty Business provided us, have got a number of parts. The first bit, which allowed us to buy the mine back in the day, was a royalty convertible debenture. That's converted into a royalty, so we got a 1.85% royalty, life of mine royalty on the mine, and we're very grateful for that participation at that time because they allowed us to do this at a very early PEA stage, and allow us to move things forward. Now that's sort of in the stack. In addition, we've got a $46 million multi-metal stream. And then after that, we've got a $21 million convertible, again with Sprott Streaming royalty, and a $21 million standby loan facility that we will either need to draw on or replace to get the mine into production. But we don't need to draw on that until the second half of this year. So what you have is, an equity valuation of, look, right now, around about $30 million in Canadian terms, and with quite a lot of non-equity restart finance. And our plan right now, working hard to do this, is to restructure and refinance part of that to lower the cost of capital, so that when we get into production, we have more free cash flow per share than we're currently projected to do. And you should watch that space.
I was going to say, what are you projected to do? Because with a 30 million market cap, fully financed to go back into production, like, there seems to be a disconnect. Of course, given the market sentiment and all, right? But what's
I mean, the equity valuation in a restart project like this, it's like all restart projects actually at this stage, is that the equity prices in a lot of risk. A lot of all mining projects carry risk. And the track record of mining restarts, whether they're large or small, it's mixed, I think we'd say. And so, you take it objectively, looking from the outside in, do I think we're undervalued today? Yes. But do I understand that, the market, nervous as it is in general, nervous as it is in specifics with respect to projects, it is going, this is a bit of a show me story. Where do we expect a re-rate to, when would we expect, and what size would we expect in terms of an equity re-rating? Well, again, looking at experience of others, and it's totally logical, this is in a show me story. When we're in production, and our thesis, which is our business plan, is proven, and then you'll see a re-rate. Do we think that could be twice where we are now or more? Yes. I mean, we're all keen and active shareholders as management, and our view is that we will definitely see that re-rating happen when we prove to the market, should we say this time next year, that we're in production. But in the classic Lassonde curve upward trend. But between now and then, as may get into now, there are a number of quite interesting construction and exploration updates that I think will do more than start to move the share price and actually increase the upper levels of that re-rating range into a very attractive investment proposition, on the assumption, and again, we live in the real world, on the assumption that our plan is exactly what we say it is, in terms of our ability to execute on it, which sitting here right now, I've got absolute confidence in.
Absolutely. No, fantastic. You touched on the exploration side. I think that's an interesting one because you recently just released some details on that. Let's talk about that, because mine restart and exploration was the big focus because you were fairly confident in the resource that you had.
Yeah.
So what's your chart?
Well, Kai, if we were, if Bunker Hill was one asset in a multi-asset company today, and you were generating cash, and you were allocating your own cash into Bunker Hill, you'd want to restart the mine the way we're doing it now, which is the lowest capital, highest return restart, with a series of optimization opportunities coming on. Why would you spend more than you need to? One of the advantages of being small in a capital-starved environment is you only spend the money that you need to. Now, that you've got to be careful when you define need, because you are taking risks. And we're pretty experienced at identifying what those risks are and minimizing them. That's the construction story. You asked me about exploration. The second thing you'd be doing if this was an asset in a multi-asset portfolio is you'd be expanding the resource. Now, going back to it, Bunker Hill ran for 100 years with 4 years worth of reserves ahead of it for the whole of that time. That's the sort of average statement. And that's often the way with these, polymetallic underground mines. But the actual resource that we're going to start mining, these were left to us and classified as such back in the day, in the 1980s. These were left to us as reserves, and in the way they used to classify that. And it was a particular ore body, we'll keep it simple, called the Lundin ore body that was found in the 1970s. This isn't a remnant scrape operation. This is an ore body that was developed by the new owners of Bunker Hill Mine that took hold of it in 1968 and was about to be mined when the mine shut down. But like all delineation of resources and reserves, there was a lot more there than they got their hands around. So the first thing we're going to be doing is we're going to be converting, this part of the story I'll come to, converting some of the measured and indicated, inferred into measured and indicated. And we're then going to be expanding in the upper parts of the mine, which is easier to access and it will be easier to mine. That is going to be interesting. Now, when are we going to give you those results? That'll be, again, in Q4 of this year, because we've got to do the work, got to get the testing and so on. But our new geologist, who came in 3 months ago from Lucky Friday, Heckler, Mark Crouch, who gave a great brief the other day, he's pretty confident that, that will bring another 6 million tons into measured and indicated. Now, that's that conversion part. The other part is the expansion, which again, both those things coincide. But then really importantly, we did about 18 months ago some geophysical surveys of areas that in our very large package that the old timers, if we call it that, the previous operators prior to 81 and much earlier than that, wouldn't have had the technology to do. So with geophysical technology that we know today didn't exist then, we've got a series of very interesting exploration anomalies near surface and near infrastructure of a size that could be, as big as what we've got today. So you should see us throughout the year, not only giving you an update on our construction activities in accordance with the plan, but you should see us doing, as you'd expect us to do, deploying a very small amount of capital to increase confidence in the resource through conversion and expand it, and then give people a view on whether those geophysical targets are going to be developed further by exploration. So it's a long answer.
A little bit to there. Are you going to sequence that into the mine planning a little earlier, perhaps? Like, it's tough to ask that question because the green expectations and things like that, because you're not doing it for the sake of exploration. You're trying to achieve a goal, of course, and if you can work it into the mine sequencing, maybe even increase payback, perhaps.
Yeah, no, but it also comes into the valuation question, because people will have a look at our restart, which is based on a PFS reissue, which gives us a 5-year life of mine. And the small restart is a $54-55 million NPV restart. Now, through this conversion and other things, we can add another 2 to 3 or plus years to the life. Now, so go back to the history of Bunker Hill. They ran for 100 years with 4 years worth of reserve life. We've currently got 5 years. Imagine if we take that to 8 through this year. Legitimately, if you were a buyer of Bunker Hill, you would be valuing Bunker Hill more if it's got 8 years worth of reserve life rather than 5 years. So that's one valuation point we do. We're very confident of our ability to do that. But what's been interesting is when we first came to Bunker, we know that some of the real prize in owning Bunker comes from what we call the deeper silver. And this was an area that the previous owners were going to mine and get into, and they were into it already. But it's underwater and it's some way away from, and some time away from what we can get into. But we were very focused on that, and people who've watched Bunker would have heard us talk about that a lot, and we will get to that in time. But what's been really useful for us in terms of the time we've owned the mine is we've had a look at the upper areas. And the advantage of the upper areas is because they're cheaper to get into. And they're close to existing infrastructure, and our mining permit covers them, and all those other things. So our ability, should exploration, generate what we hope for and expect, upper area reserves are are going to be very valuable indeed. So, like I said, we're in the mining business. This fast forward a year, our plan will have us in production, and these exploration activity would have yielded some certainty associated with what our resource path can be. And I believe by then, and we've been speaking a while, we'd have gone from being a low capex restart into an operating mine with increasing amounts of upside potential. And that's a totally different value story as I see it. I mean,
absolutely. Yeah. Just the last few minutes, just talk about the mine restart project itself. Like, how's construction going along? You mentioned on time, on budget.
Yeah.
Of course, one of my questions was, are you on time? Are you on budget? Clear that answer.
Yeah.
But what kind of detailed work are you doing right now? And, any bottlenecks you see? Anything that's giving you, sleepless nights?
The answer is no. But on time, on budget. But managing bottlenecks or the sequence of activity, closely. So give people a picture. If people have been tracking this story, there are many elements to the restart, but I'll simplify it into the underground mining and then the processing and in the round. So underground mining, the mine in 1981 was accessed primarily via the Kellogg Tunnel, which you remember going through, sort of 2 and a bit miles worth of track, narrow, old, bumpy, difficult access. Well, we're not using that. What we're going to be doing is what we have done. We've enhanced an existing portal, by which I mean we've taken it from 10 foot by 10 foot to 16 by 16. And have connected underground the areas we want to mine in the first 3 years with ramps and so on. We haven't quite done all the underground development. We're going to be building an underground maintenance shop. We're going to be putting maintenance ventilation in place. All of this is happening, almost as we speak. But we have also connected the underground mining operations to grid power. 4.7 cents per kilowatt hour. It's green power, incredibly cheap. So the underground mining part, and there's certainly bits to that story, has moved very fast. And if you said to me, let's go and do some mining tomorrow and put it into somebody else's mill, give us 8 weeks, we could do that. So, and very, very low capital investment, because we inherited all this infrastructure. Now, on the processing side, you'll remember that it's how we brought Teck in as a 10% shareholder. We bought their used facility or existing facility on the Ponderay site in Washington, dismantled that, helped them close that site, move that to our site. And for the last 3 months, we've had an active refurbishment program in place using our existing infrastructure and contractors, getting the elements of that Ponderay plant ready to be constructed. But because the ore was hosted in sedimentary rock over in Washington State, where quartzite, we need to have a much more powerful upfront mill. So we bought from Barrick Gold, their closed mine site at Golden Sunlight in Montana, their mill, and they'll be moving to site over the next 2 weeks, and you'll see that pictures going out. The final engineering of the all of that has been done. Procurement orders have been issued for all sorts of things, from buildings for the. You can imagine everything that needs to be done to enhance all of this. The old processing facility is very different to what's going to be put in place now. The second thing we've done is our initial plan had us looking at putting all the waste from the processing plant underground, either as paste backfill, we did long haul open stoping, big, nice, wide areas to mine, low cost. And the rest of it going into underground voids. Where that's possible, we will be doing that. But in order to ensure that where that periods of the mine plan where the voids aren't available or it's not economic to do so, we're going to do dry stack tailing. So we had to complete the engineering of that, and we're going to be using and get our tailings filtration press and our paste plants all, finally designed, procured, and in place. But what we found, and you went there, Kai, is in order to ensure the optimal material handling, not just for our restart at 1,800 tons a day, but for the ability to scale up to 2,500 tons a day, we've got the processing capability, but we need to make sure we have the space for moving all the material around. So what we're doing now is we're flattening all those office buildings, moving our administrative offices down the hill, actually into an area just next to the city hall and the Superfund site office, very conveniently. It's only 300 meters.
You're flattening all these buildings.
We're flattening all the buildings.
I was in these buildings. I like these.
You'll watch this by our little video clips over the next couple of months, and then that will provide the space to put our tailings filtration plant there. And so all of that is happening. Yeah. And then out in the supply chain, things that we need to get built for the plants are all being built, and procurement orders are out there, and all of that's happening. And I think you'll see much more, shall we say, televisually impressive activity, things popping up out of the ground as we get through.
Make sure you record a time lapse as well.
We're going to be doing all of that through March, April, and on. And so that gives you a feel for what's happening on the ground.
Fantastic. Yeah. Richard, this has been a good conversation, but let's wrap it up here. What are some of the next catalysts, next news releases we can expect from the company?
Yeah, you're going to have a series of, as we do every month, construction updates. That should be reassuring for the market. Would say they're catalysts, they're reassuring. The most exciting catalysts, I believe, will come as a result of the restructuring of our finance as a process ongoing. Now, watch this space. The markets are tough for everybody, so we don't get a free pass. But we are a mine and a plan that is very significantly de-risked from where it was 3-4 years ago. And so we are finding some capital providers that previously weren't interested are becoming so. So I'd say that over the next few weeks, a couple of months or so, is the biggest catalyst that you'll observe. But for the exploration observers, you're going to have to wait till Q4. But where we can, if we do get news that will excite and reinforce our view, we'll share it as early as we can.
Fantastic. Awesome. Richard, fantastic update. Really, really comprehensive. I really appreciate that. We need to do this more often. I really appreciate it.
Thank you.
Thanks for coming to the studio.
Thank you.
And everybody else, I hope you enjoyed this conversation here with Richard Williams. And we're shareholders of the company, so obviously terribly biased in our conversation covering of this story, obviously. So do your own homework, please, but leave a comment, leave a like, and if you haven't done so, kindly subscribe to the channel. Thank you so much, and we'll be back with more content here from Vancouver. Thank you so much.